They may call me the prophet, but in my life outside of the business of esports, I have worked on the investment side of the table for the better part of the last 2 decades. The single fastest growing area of gaming and esports is gambling. It's booming right now. You don't need to be a prophet like me to see that. However, as an investor, I've stayed away from gambling and betting companies because of the reputational risk and often shady nature of the companies involved. This was true until now. I've recently bought stock in a new public company called Esports Entertainment Group, or EEG, which is focused on esports and gambling. The big difference that changed my mind is that EEG is a public company, NASDAQ listed, and fully regulated, focused on esports betting. The regulatory and audit requirements of a public company are key in my mind to provide the needed transparency for players, bettors, and investors. I had an opportunity to host the CEO of EEG on this podcast a couple of months ago, and I was very impressed by his vision for the company. We've stayed in touch, and I'm delighted to announce that they've accepted to become a sponsor of the podcast. If you're a family office, institutional investor, or investor of any kind, really, Esports Entertainment Group, ticker symbol GAMBLE, GMBL, might be one of the best ways to get exposure to the esports betting space and gaming in general. Make sure to check them out at esportsentertainmentgroup.com. Having said that, I need to make sure to state that this is only my opinion. I'm not an investment advisor or selling stock in the company. Please make sure you do your own research and seek advice from a licensed professional if you're looking to invest in the field. From the keyboard to the boardroom, this is the Business of Esports podcast. I am Paul Dewalibi, and I'm joined today by my friend and co-host, William Collis. For those of you who are new to the podcast, welcome to the official podcast of esports. What we do here is we cover the most pressing gaming and esports topics and news of the week, but we look at all of it through a business and C-suite lens. We dissect, we analyze the business implications of everything happening in this industry. For our regular listeners, thank you guys for listening. Thank you for tuning in every week. Thank you for all the love, the 5-star ratings and reviews. We really appreciate it. If you haven't already, go tell your friends about the podcast. Go tell your coworkers about the podcast. Leave a 5-star rating and review. And if you're feeling really desperate, go buy William's book, The Book of Esports.
Somebody keeps reviewing it, Paul. We're up to like 85-star reviews. Somehow the listeners are doing their jobs out there.
You got your students to write reviews. Don't lie to me.
Strategy. No. I was not allowed to do that. There was some academic guidelines.
There were some That's why you were trying to convince me to get my students to write reviews.
Well, I don't know if the same academic guidelines apply if it's not your book. I think there's a gray area that you can.
I'm not going to go in any gray area, right? My students are using your book. They bought your book. They're super happy to have read the book. Many of them loved it. I'm just saying I'm not going to get them to write a review. And if they choose to, that's great. Right? I wrote a review out of my own free will, not because you twisted my arm.
And our guest today wrote 2 reviews of the book, right?
so if our guest today has not bought this book, William, I don't know what we're going to have to do, but
I don't know. This is the awkward moment. I'm quickly posting the Amazon link in our private chat.
I wrote a review and I got my mom to write one too, so you can count 2 quotes for me.
For our listeners, our guest today, such an awesome guest. I'm so excited to have him on the show. John Patrick Lee, JP, joined VanEck in 2014. He's an ETF product manager focused on video gaming, esports, and international equities. His responsibilities include business management of the existing ETF lineup, market strategy, and positioning and product development. Before VanEck, JP served as an investment advisor representative with Dorsey Wright Money Management. He received a bachelor's degree in English literature from the College of William and Mary and holds a CFA designation. JP, welcome to the Business of Esports podcast. It's so cool to have you.
Hey, it's been really good meeting you guys, talking to you guys. Very excited to be here. Thank you very much.
So JP, look, for those of you, this was probably one of our fanciest sounding intros, right? Like this, anything finance, I feel like always sounds very, very fancy. I don't think we've had such a distinguished guest in that sense on the podcast. But maybe tell our listeners a little bit about your background, how you got to doing this, how the love for gaming maybe came about, or how you got into sort of the gaming piece of the finance world, and maybe a little bit about VanEck's ETF in the esports space.
So I didn't have any aspirations to be in finance. My parents were both stockbrokers. So growing up, I was like, I'm not doing that. I English literature in college, didn't go to class, played guitar all the time, moved to LA. And once I got to LA, I was like, okay, I guess I need to start paying rent now or something like that. And so I landed at this company that did they did stock trading systems. So worked there for 2 years or so. And then I got my first real job at Dorsey Wright. And it was a great education. They had ETFs and mutual funds and separately managed accounts. So I learned a lot from those guys. And then I moved back from LA, back to where I'm from in Florida. And I just landed at VanEck on the operations side. So I was working operations, which is a little bit different what I'm doing now. Basically, portfolio managers are doing trades, and I'm kind of making sure that the trades are going through correctly. It's called trade settlement. So I did that for a couple of years. I got my CFA designation, which was very hard. I don't know if any of your listeners are trying to do that. My recommendation is stick it out and ride the wave. And then I was just applying for jobs nonstop. And a job opened up within VanEck on this marketing position. I had a lot of experience kind of doing that from Dorsey Wright, writing blogs and stuff like that. And it was just like, I moved up to New York about 3 years ago, started on the team, and it's just been nonstop. From a gaming perspective, I mean, I think I'm 37 years old. I got my first Nintendo when I was 4 or 5 years old back in 1987, 1988. And I've been playing video games, ever since, off and on. In college, I was huge gamer, kind of petered off in my 20s, but I'm gaming full time these days. So I love playing video games, and to be able to do video games as a job, it's a lot of luck for me coming from, quote, finance background. I was in the right room at the right time. It's, who wants to be, who wants to do a lot of work on this, who wants to focus on this. And everybody's kind of looking around. I'm like, I'll do it. So, and here we are. So I think, end of 2020, I think, from a assets perspective and from what's out there and what's being offered and how people are talking about video games, much, much different environment than we were in back when we launched the fund back in 2018, October. So another product on the market, it wasn't making waves. It wasn't doing a lot. And so when we launched it, we were second to market. Just as an aside, it's the VanEck Vectors Video Gaming and Esports ETF. The ticker is ESPO. Provides access to video game companies, right? So there wasn't a lot out there at the time, and now there's multiple competing products, a lot of energy, a lot of excitement in the space on the investment side. It's like, investment advisors in the financial community are just now saying, oh, $60 billion a year industry. Wow, maybe we should start paying attention. So over the last 2 years, there's been a ton of investor education, on the business side of it, like, financial advisor world. And I'm just very excited to be here to be able to be talking to you guys.
JP, I'm curious, right? Like, VanEck you go to the website, has like 1 million ETFs, right? Like there's ETFs for just about every sector, industry, right? Focus you can imagine. I'm curious, and Matt, I don't know how much you know about the story because it sounds like you were in the room when it happened, but like, what was the genesis of VanEck deciding they wanted to get into gaming and esports, right? Like when you're doing 1 million other kind of sectors, like how did that come about in 2018?
When we're thinking about, and I'm speaking from in my corporate hat, when you're thinking about how we're going to launch a fund, what to focus on, there's so many different things you can do. There's so many opportunities out there, right? So, and thematic ETFs are really hot right now. So a thematic ETF is when you basically not arbitrarily, but you come up with an idea. You say video games are a great investment idea, or healthcare, or whatever it is. This is a good idea. So we're going to build an index around it. So there's a lot of market research that goes into it. What's out there now? Like I mentioned, there was one other ETF out there right now. When we launched back in 2018, that's not really that crowded. So in other areas, there might be 7 ETFs or 10 ETFs, right? So how many other guys are playing this story? What's the competition like? And then maybe there's 5 or 6 ETFs out there, and they're not really bringing in a lot of money, right? So you could be like, okay, there's 5 ETFs out there. They had their big moment 5 years ago, but nothing's happening to them right now. And for the gaming thing, it was just like right place, right time. There was an energy. I don't know if you recall back. And so we really started getting going, I would say mid-year, end of the second quarter of 2018. That's the Fortnite craze, right?
Yeah.
So that's Ninja. That's Ninja, ESPN.com. People are being like, wait a minute, this guy's a millionaire and he's playing video games. So when you see something kind of happening like that, it's like this organic energy that's just kind of in the ecosystem. And that's how 2018 was for video games. And it's just a business decision. It's a combination of great timing, perfect confluence of factors that are going on. Where's the energy going? And then you just kind of try to ride the wave. That's how I would see it.
I mean, that's so cool though to think about, right? That Ninja appearing on TV, right? Like ends up creating a new financial product, like way over here, right? Like the effect of his stardom in that year and sort of his rise had all these other sort of add-on consequences that we don't even think about.
100%. And I think it goes a lot to, it's like the Peter Lynch thing, invest in what you know, right? So when you have people who are investment professionals and people who are investing, let's say they're 35 to 60, right? So they have kids, right? So these people are having kids and their kids are like spending all the money on Fortnite, watching Twitch, getting really involved. And so it's kind of one of those things where their kids are talking about it. Now it's on the front page of the Wall Street Journal. Now it's on ESPN.com. So it's like, what's going on here? And I think it kind of gives people pause. So that's what I mean when I said over the last 2 years, we've gone from people being like, what's going on here, to being like, okay, this is real. It's not going away. And, we categorize it as kind of like a long-term structural growth industry because there's a lot going on there. I mean, you've got strong revenue growth. As you know, you've got crazy user base growth. And I think what a lot of people don't really understand is it's not just 12-year-olds or 15-year-olds playing with their parents' credit cards. These are 35-year-olds who have jobs and make $100,000 a year and they spend a lot of money, on video games. And you guys know that, but I think a lot of people don't. So that's what I mean. It's been a really fun.
Yeah, don't tell my wife any of this, JP.
I'm in the same boat too. Like I get my COD, I get my Warzone time in when I can.
Don't let her see my cosmetic digital item spend. That's that's firmly hidden in this family.
Yeah, I got the Saw guy in COD, and I'm like, oh yeah, I bought this. She's like, how much was that again? I'm like, oh, I had points already.
Oh, no, honey. Valve is our retirement account.
Yeah, exactly.
JP, I'm curious, I just want to back up for a second, right? A lot of our audience are not necessarily in finance, right? And the question I get most often probably from everyone who meets me or talks to me is like, I get it. I hear you all the time. I'm super excited about gaming and esports, but how do I invest in the space? Like, how am I going to make any money in the space, right? Where should I put my money? And a lot of times I'm recommending your ETF, right? Because I believe in diversification and I believe in kind of the benefits of an ETF. But maybe you could break down a little bit for our audience who's not in finance, just sort of a little bit what your ETF's all about, what goes into it, what it is really, like what are they actually investing in? Just some of the basics maybe.
Sure. I'm going to start by saying this. So I'm a registered rep, registered with the federal government with my company. So I'm not out here pumping stocks. I'm not out here giving advice. Make your own investment decisions. Be careful. There are risks associated with investing. Having said that, there are many different ways to play the investment in the space. And I think right off the bat, people get excited about esports because they're like, Team Liquid's worth $500 million or, Cloud9 or 100 Thieves. Those are mostly private organizations. So unless you are an institutional investor or you have $1 million, you're not going to be able to invest in that company because there are requirements to be able to basically get in the room and talk to them and give them your money. So we are focused on what this ETF is focused on, the publicly traded companies who are participating. So let's do a quick rundown of, kind of what's out there. So first of all, the ETF, like I said, VanEck Vectors Video Gaming and Esports ETF, tickers ESPO, and it tracks an index. So it's technically a passive ETF. So essentially, we're not sitting in a room saying, okay, well, EA is going to do good and Activision is going to do bad. So we're going to keep EA and kick out Activision. We're not making any active investment rules or decisions. The index is run by our wholly owned independent subsidiary. It's called NVIS. So they make a number of different indexes for our ETFs. So essentially they come up with these rules. So they say, these are the rules that we're going to use. And if we apply these rules to a universe, it's going to create a portfolio. So there are a couple of rules that really define the portfolio in the index. So the first one is pure play. So to be included in the index, a company has to make over 50% of the revenues from video gaming or esports or related hardware or software. That's to be initially eligible. So right off the bat, you're excluding a ton of names that are really big video game companies, but as a percentage of the total revenue, it's not a video game company. So think about Microsoft, Sony, Amazon, Intel, Google, Apple, on and on. We're talking about billions and billions of dollars being generated by those companies, but as a percentage of their business, it's super small. So you think about Microsoft, how many Xboxes do they sell? How much money do they make on Game Pass? But as a percentage of their business, it's between 7 and 9%, which is very small, right?
Yep.
Even though they're making hundreds of millions. So those guys are out. Okay, so that's step one. So then step two is what you take what's left and then you say, we're going to take the top 90% of the market according to the free float market cap. What that basically means is we say, these are the video companies we're talking about, and we're going to take the top 90%. So then it rebalances quarterly. So once a quarter, you say, what does the index look like now? So you run those rules on the universe and it creates a snapshot. So then the index rebalances on this day, and then going forward, things are going to kind of move around with the market. And so then that's how the index returns are generated. So then our job as an ETF provider and our portfolio manager's job is to basically make sure that our ETF matches what's in the index. And that's kind of the long story short on what and I don't know if we want to go into even what an ETF is. I mean, that's a whole different ballgame too. So ETFs are basically tradable securities that are composed of a basket of a bunch of different securities. So I don't know if we want to go down that road. That's a wormy hole.
No, but what are, like, I guess more specifically then, what would be the benefits of of someone choosing to buy an ETF versus other options from an investment standpoint?
So there are a lot of benefits to approaching investing in a universe in an index or a theme like this through an ETF. So first of all, there are 25 stocks in the index and ETF. So what you're doing is you're diversifying, you're hedging your bets. If you think as an investor that Activision again is going to go up and Activision is the only game in town, you don't need to worry about anything else, then you would put all your money in Activision. And if Activision doesn't do well, then you're not going to do well either. So by diversifying across a bunch of different companies, you're kind of saying, well, I'm going to, Activision might do good, but maybe EA does better, or vice versa, right? So you're hedging your bets and you're allowing yourself to participate in the companies that are in the industry without having to, read a bunch of financial statements and understand that this company is going to do great and this company is not going to do great. That is the really, in my opinion, the benefit of an ETF, the diversified basket approach.
Sorry, go ahead, William.
Would it be fair to say, like, as the simple pitch, right? Like, if you're somebody who's listening to this podcast and you're a believer in esports as a sector, right? And you see what it's going to do as a phenomenon in our society, but you don't have the time or the wherewithal or the interest to churn through P&Ls to figure out, hey, should we be an Ubisoft versus, something else? Like, you just want to bet on esports. The VanEck index is the way to go, or one of the ways to go.
Yes, that is the key here. And I think that applies to a lot of different thematic ETFs and products. That if you want to make a targeted bet on a sector or a theme or an idea, an ETF is often a good way to do it for those reasons, because it's diversified and I like video games and esports. We're gonna do it. We're gonna put our money into these 25 companies. And that's how you do it. Instead of trying to say, Ubisoft up, Microsoft, or Activision down.
JP, I don't want to dive too much into the rules sort of that you apply to the universe, but I'm just curious how you look at sort of, because it's a kind of recurring theme on the podcast in terms of like how we look at opportunities in the US versus globally. right?
Yeah.
And how much of it is sort of a global focus? How much of it is a US focus? Does it not matter?
So that's when you think about starting universe. So our starting universe is all global equities that are available to be traded on the major exchanges, except for onshore Chinese market, which there's some things that getting into and out of the Chinese market or the onshore market has presented some hurdles over the last 20 years or so. So we said we're going to exclude the Chinese onshore Chinese names, but we're including the Hong Kong names and essentially any company around the world besides the Chinese onshore market is a part of the universe. Okay.
Got it.
So then you apply the rules as we've gone over. And then the portfolio is a global portfolio. So you've got US stocks, you've got Chinese stocks, you've got Polish stocks, you've got all around the world is represented. And what's cool is that it kind of syncs up. So when you look at like a Newzoo report that shows here's the global revenue share of the video gaming industry, it syncs up pretty nicely to the ETF. So, and in my opinion, it does do a really good job of providing a global exposure to the ETF industry. Now, if you wanted to, you could say, well, I only want if as an an index provider, or if you were going to create a portfolio, but I only want Chinese names or I only want US names. It would be a completely different portfolio than it is now, but we're taking the global approach in this case, and I think the portfolio does a really good job of representing the industry as far as what's available in the public markets.
Is that a big focus though? Like, is that part of the conversation whenever you're starting one of these thematic ETFs? Like, how closely does this represent the reality sort of on the ground?
I think so for sure. And there's different ways to do, like, first of all, yes, it is part of the conversation, and it goes back to the education, because again, I'm talking to Joe Advisor, and his kid plays Fortnite, and he thinks this is just a Fortnite thing. And what he might not understand is that, okay, Fortnite's big in the US, but it's not everybody's playing Fortnite around the world, right? So the people who are in, like, let's say Southeast Asia, they're playing Free Fire, right? They're playing Arena Free Fire on their cell phone. So if you're just so focused on Fortnite, then you're missing out this whole other thing that's going on all around the world. So that is a big part of it for me, is talking about all these companies that are in the business that you've never heard of, like C Limited, which has been
C is like almost no one, I feel like, that you talk to in the US has really sort of heard of it. Or
exactly. And then it becomes a question of, the way I see it is, the video game market is super localized, right? US companies focus on US consumers, Chinese companies focus on Chinese consumers. There's some companies like C who are focused on Southeast Asia, Latin America. So everybody's kind of focused on their little channel. And so if you really want to get a comprehensive exposure to the industry, you do need to have a global portfolio, in my opinion.
Interesting.
That's
William,
very unique.
so I don't know if you had a question, William.
Well, this might be really too in the weeds. I have two very mechanical questions. I guess maybe I'll ask the first one. You can tell me, but I'm interested in, like, how you guys define esports revenues, because this is kind of one of the big questions that I see the industry wrestling with today. Like, Newzoo has their Newzoo report of esports revenues, and they say the industry is $1 billion.
Didn't you just write a paper about this?
Well, that's why I'm kind of leading with this, because I have some expertise. But then the Chinese government comes out and says, hey, esports was a $15 billion market here last year. And you're like, what? And so I did. I wrote a paper for the IGE that tried to have a different valuation approach. But I have some familiarity with it. So I'm curious, like, how do you define a dollar coming from esports for the fund?
Okay. First of all, we're not a research analysis house who is pulling, primary source data from market vendors to say X number of dollars spent in the US, X number of dollars spent in China. We're not doing that. So, and I think the second point is, there are different ways to define it, right? You can say esports is a $1 billion industry because you're only talking about the sponsorship stuff or the media rights stuff. Or you could say, hey, wait a minute, League of Legends is one of the biggest esports games in the world. Any dollar spent within the League of Legends ecosystem over the next year, that's an esports dollar too. So that is a question of, how do you define, like, what does it mean? What does it mean, right? It's like, how do you define what we're talking about? And I think the second answer to your question is how we do it is, the index provider really does quantitative and qualitative analysis using, financial reporting statements that are published by the companies, websites, all sorts of different things to figure out is this a video gaming and esports company or not? And then I think one of the things as a wrinkle too is that, you know, a couple years ago, like when we first launched the phone, I was digging into Activision, and they broke. And to my opinion, Activision is one of the biggest esports companies in the world because they have Overwatch League and Call of Duty League and et cetera, right? So Activision is, in my opinion,
Hearthstone GM.
Hearthstone too. I mean, nobody in my world knows about what Hearthstone is. But for me, and you know, we can start talking about that. So I broke out the revenues for Activision, and they had you know, in-game net bookings or this or that, and then they had a line item for other, and lumped into other was MLG revenues. It was and this is when the Overwatch League had just come out. So it was MLG revenues, Overwatch League revenues, and then other media rights deals that they'd made with like toy makers and stuff like that. So and that part of their business was less than 8% of their overall business. Activision, one of the biggest esports companies in the world, less than 8% of the revenues were coming from esports, right? And I think a lot of companies don't really want to break out their esports line items because they're still trying to figure out the business, right? It's still new. Yep. So you can see a company like Modern Times Group, right? It's pretty easy to say, okay, yeah, that's an esports company, right? Because they, you know, they're involved in producing these events, and they're right there, right? But for a company like Activision or Take-Two or I don't know, any other companies that are actually participating, they're not breaking it out because I think they're not necessarily profitable. I mean, if there was a company that was like crushing it on a profitability scale, making $500 million, $1 billion a year in the esports streams, they're going to put that on their business statement because they're going to be thumping their chest about it, right?
Yeah.
So, which doesn't exist. So a bit of a tangent here, but I want to go on it. Like I often am criticized for saying that I think esports proper, right, not video gaming in general, is kind of and will be always a bit of a niche market, right? It's not the huge opportunity. It's still a big opportunity, but it's not the most exciting opportunity. It's the video gaming in general that's probably the most exciting. I'm curious if you guys see that the same way, or do you think sort of the esports proper is where, and you personally, JP, where a lot of the growth may happen?
I think that, in my opinion, esports is like tip of the spear, right? So it's a small percentage of the overall deal, and it creates a lot of energy and a lot of excitement because people don't understand it. It's still new. So I think that you are mostly right. And I think you're right in a lot of ways of framing it like that. But I think that the whole ecosystem is so intertwined, right? Like you got guys like Shroud who are professional esports players. And then they're like, okay, I'm going to do streaming full time and I'm a media personality, right? Dr. Disrespect. He's the best video game 2-time, whatever, but he's not an esports pro, right? And the way I think of it is like, you know, you look at you watch an esport, like an actual hard esports competition, and you see who is playing, right? It's like, I mean, the computer geeks, video game nerds who play video games for 18 hours a day, and they're not playing they're playing to have fun, but they're playing to win. It's super focused, super competitive, hardcore, right? And then you flip over to Nick Merckx on Twitch. He's got 60,000 guys watching his stream at the same time every single day. And it's like, so that goes back to how do you define esports, right? So in a lot of ways, I agree with you. But then in a lot of ways, I think that when you have a situation like 2 years ago or last year with the, Fortnite World Cup here in New York, Fortnite World Cup, front page articles, right? 2 weeks before, the week of, and 2 weeks after. Booga wins $3 million. Front page news, right? What does that do? It gets everybody talking. This kid won $3 million. That's more than Tiger Woods won, right? So it's like a positive feedback loop. So esports by itself might not be like the big money maker, but it's feeding into this loop. You know what I mean? It's feeding into this energy loop. That's how I see it.
I just worry that it creates confusion in the marketplace a little bit, right? Like in some ways it hampers the education effort of people who are not in the space day in and day out. Like the three of us sit in a room and throw out words and we intuitively sort of know what each other is talking about from a definition standpoint. But like for the uninitiated, trying to define esports and putting it in air quotes to make it sort of strict esports, like I find it hampers that education factor, which I would assume for an ETF, education is a big part of the marketing exercise, right?
100%. And I think how I just explained it is how I talk to about it with people who aren't in our inner circle, right? I'm like, yeah, esports are great. It's a lot of energy here. And there is, let's say, $1 billion in revenue according to Newzoo. And then I'll say, but if you look at Newzoo, esports is $1 billion industry. Video games is $160 billion industry. So where do you want to put your focus? Are you the guy that's going to crack the $1 billion industry as opposed to focusing on the $160 billion industry? So I kind of guide people gently back to like, yeah, I'm excited about esports too. It's really fun, but let's put it in a perspective. 1 billion versus 160 billion. And then another thing I do too is like, who's winning that? Who is winning the esports revenue, right? Who actually is going to make the most money off of it? In my opinion, it's the publishers, especially now that they own their own leagues, right? Like, who's going to make the most money off Call of Duty? I mean, Activision. Who's going to make the most money off of Fortnite? And on and on and on. So any kind of esports jet and momentum and craziness and frothiness, to me, is going to feed up to the publisher. So then then that's a conversation of, well, how do you get access to the publisher? Oh, we have this cool index that, we're providing you market cap weighted exposure to the companies participating. So the companies that are going to do well, they're going to be in here and you're going to participate with them, but without having to say Call of Duty is going to do great and Fortnite's going to fail, without having to make that bet.
Yeah. Go for it, Paul. Go for it.
I was just going to say, my other curiosity when it comes to ETFs is typically like when the beauty, I think, of an ETF is it trades like a stock, right? So you can buy and sell. You're not locked into anything. But I'm curious, because it's thematic, right? You're fundamentally betting on a trend, right? You're betting on something you believe will be big or is on trend to be very big, right? I'm curious. I don't know. And I don't know if this data is even available, JP, or if you're even able to share it. But like, how many people buy ETFs like ESPO and sort of hold it for the longer term versus sort of trading it like a stock day to day, right? In and out.
That's a good question. And so there are different. So there's a jillion people in the world, right? So there are people that everybody's got different goals. Everybody wants to do a different thing. So one of our other offerings is a semiconductor ETF. So it provides exposure to the semiconductor industry. And that ETF is what we would call colloquial, whatever, how you ever say it, as a trading vehicle. So it's like a hedge fund will say, we're making a bet, it's like a risk on trade. So risk on, we're getting into semis because semis are a leading indicator kind of group. And we'll see, literally hundreds of millions of dollars flow into the semiconductor ETF because people are making a bet. And if things turn around, they'll get right back out, right? So they'll go coming in and out and in and out and in and out. So in the 2 years since we've launched this ETF, it hasn't been a lot of in and outs because we're still in the education phase. So the goal from my perspective is I want people to be invested in the long term. And then I want for the people like the hedge fund guys, I want them to say, well, I want to make a short-term bet on the industry. So I'm going to use, ESPO. So I get it. I want you
want both.
Exactly. So and then taking a step back, I mean, we have other offerings and products which are like, look, this is this strategy is a long-term strategy, and over time, this strategy is going to provide hopefully, the potential to outperform the broad market. So you don't want to be trading this in and out, right? You want to just put your a monthly deposit in and forget about it, right? So in my opinion, ESPO can serve both people.
And I hadn't thought about the hedge funds, but my intuition was, right, if you're betting on a theme, it makes sense to hold it, right? It's because you believe something is going to happen in the future, right? But I hadn't thought about hedge funds who maybe want sort of in and out kind of exposure who can do that as well.
That was the other thing I was going to ask about using the ETF for maybe a more sophisticated, but still a casual investor to do alpha beta mixing. So like, let's say I love esports, right? So I'm going to go long on the sector. I get my beta risk from your ETF,
Yeah.
But then I'm going to make a personal bet. Activision Blizzard, man, I believe Overwatch 2, it's coming. So I'm going to wait into that. You know, the fact that you laugh says a lot about the state of the industry right now, because I said that unironically, and you, like, I was dead serious, and you took that exactly how I think listeners might take that.
Because Overwatch 2's been coming since the ETF started.
Half-Life 3 all over.
But my point is, like, you know, because I had a lot of friends over the years who'd say, "Oh, I want to go. I'm gonna buy AB stock, or I'm gonna buy this stock because it makes the games I like." And you know, obviously, like, yeah, that's, you know, buying things you like is not necessarily the worst investment strategy, but it's not exactly, you know, like Carl Drucker, you know. Like, is that something you advocate, or you see the ETF used as, you know, as the alpha beta mixing tool?
Yeah, so this is in the conversations we have with financial advisors or individuals. We would, you know, I would frame this ETF as the alpha, because you know, because you think about somebody who, you know, has all their life saving. Let's say they have $200,000 and it's in a savings account or in an IRA account. I am not going to tell somebody to say, ESPO is your beta. That's all you need, and you're going to take targeted bets on the market. No, I would say, look, you have a core allocation of, let's say, a classic 60-40 portfolio of diversified broad market, S&P 500, maybe a little NASDAQ, whatever it is, right? Some bonds. And then if you have 5%, you want to spend, you know, 5% of fund money on, you think this is a cool sector, a cool theme, then that would be the alpha generator for me. If I'm talking, you know, Joe investor or Joe advisor. And that's just coming from like a fiduciary standpoint. I was like, that putting all of your eggs in the ESPO basket, you know, somebody who's 45 years old with 3 kids or whatever, like that is not appropriate or a good idea in my opinion. Like that's just not. So that's how I would see it. But I would definitely see that your framework, I think, is exactly correct. I just think that you're just a crazy esport gamer guy, and that's what you're just highlighting.
Yeah. My worldview is the beta is gaming companies, and you're like, no, that's the alpha, buddy. Like the beta is the universe of large cap U.S. corporations.
Exactly, that's exactly right. Yeah, perfect.
Guys, let's move on. Can we talk about some news this week? Because I think there's a few interesting stories, and look, for those of you who are listening to the podcast and not watching the podcast, JP's nickname, so everyone knows me as the prophet and William as the professor. JP has JP Easy Livin Lee on here. So anyone with a gamer tag Easy Livin is going to have an opinion on games in the gaming market. So let's jump into some news here.
JP, tell me honestly, when you win a match, do you type easy game, easy life? Is that your go-to?
I don't. I'm not just saying nice things on chat.
I was gonna say it's like your nickname's the perfect entry into GG Easy, right?
Yeah,
like if you really want to be toxic.
All right, enough joking. All right, let's go. News.
Let's talk about this news story. I think one of the most talked about this week, which was an article from the Esports Observer, and the headline is ESPN confirms future shutdown of esports editorial operations. The article goes on to talk about how basically ESPN is shutting down their entire esports division. They're not going to publish any news, any articles. All their social media accounts related to esports will go dark, and they've laid off essentially all of their writers, editors, video producers, journalists, etc. So, you know, not great news. Obviously, this is when you're talking about layoffs and people losing their jobs, and it's never happy news. It's never good news, obviously, and we feel for the people who lost their jobs. But it is interesting in the context of ESPN guys being, I mean, unequivocally the leader in sports news, right? I don't think any either of you can dispute that. Why would they be getting out of esports? Like, help me guys here understand what is the motivation here. JP, I'm curious to get your take on it.
I think they're just getting smoked by, the organic community. I mean, I think somebody who is dialed into the esports league and the esports ecosystem isn't going to ESPN.com for their esports news. I mean, that's my initial take. I mean, from my perspective, ESPN as traditional media, and kind of top down. And if I want to know what's going on with a specific league or team or whatever it is, like a specific person, you go to their Twitter or you go to their Twitch page or Instagram. Like there's so many different ways to get your news. And I think that people that are interested in esports, as a general rule, are using social media as a news source much more so than older generations, like your ESPN boomer and Gen X generations. Yeah, they're going to go to ESPN and Sports Illustrated to get their news. Younger 40 and under guys aren't, and I think it's just how different people are consuming their media now is much more interactive, organic, and tilted towards social.
Is it fair to say then that you feel like this ESPN does not sort of satisfy or even resonate with the hardcore gaming audience, and therefore sort of has no audience here?
I mean, 100%. I think that, and this goes back to William's earlier question about or maybe it was your question, Paul. When is you trying to tamp down the esports hype, right? Which I understand, right? And I think that people who are not doing esports and don't know video games, and they see a picture of a stadium and oh, this is the next basketball, and then it's like, no, it's not, because people are online on Twitch. It's just different. And so I think people are trying to take their old worldview and apply it to this new phenomenon, and it doesn't necessarily fit, right? And so to me to see ESPN shutting their esports thing down, it doesn't surprise me at all for those reasons.
Yep. William, I'm curious your take on it.
I actually think, JP hit the nail on the head. The reality is they shut this because people weren't reading it, right? Yeah. That's why you shut this. I will point out though, I don't think this was an issue with the quality of content they were putting out. They had some big names on that staff, like Jacob Wolf, for example, who I think of as one of the go-to authority. It wasn't like this was written by college kids phoning it in, toe in the water. This was an honest attempt by ESPN to make the content vertical work, right? It was, right? And so, I think the bigger takeaway here is not ESPN lost, and that is sort of how I read it, is they lost. They can't get the traction. The thing that I take away from this is a bit of a meta risk to sports as a whole. And here I'm going to reach a little bit. But look, why does ESPN as a diversified sports news vertical work? It's because the people who enjoy the NFL might also want to know about the MLB, might also want to know about the NBA, probably follow more of those things. Now, I have over the years seen many different statistics that try to tell a story that, gamers who are watching esports are also watching traditional sports, right? Many stats I've seen have seemed to suggest that. And I've always thought well, that's odd, because I know my gaming buddies watch the Super Bowl, but they're not exactly tuning in for, Monday night football every week. That doesn't seem to check with my daily life. And the fact that ESPN can't make it work, to me, is a very strong bellwether that there is very little overlap between people who are watching esports and are interested in reading that coverage and people who are watching traditional sports and are interested in reading that coverage. And if you're doing the Venn diagram and those two circles don't overlap, that is really scary if you're sports in general, because in my mind, that shows that these aren't complements. Esports and sports aren't complements. They might be actually direct substitutes. And so, if I'm ESPN now, okay, whatever. But particularly if I was a baseball team, which is sort of the lowest performing, highest aging sport, I would be freaking out right now, because this is just more direct evidence that the next generation of consumers who are consuming competitive content are consuming digital content, and they're consuming it in lieu exclusively of sports content. And I think that's great for our industry. It's probably great for Easy Livin's ETF. I don't think it's great for sports.
Well, that's why you see the sports teams, bringing in the esports guys under their umbrella, because they know, they see it's growing. They know it. What professional sports team in the U.S. doesn't have an esports subsidiary, right?
Sometimes, JB, it's interesting you say that, because sometimes I think we give the owners too much credit, as if they're hedging their future. I think that, I don't know if they're that smart or that prophetic that they think this is a hedge against the future decline of their traditional sports business. I feel like it's almost like they feel like they have to.
Yeah.
Right. Yeah. It's like I have to have some bet here because who knows if it does take off, right?
And also the cost of a bet, by the way, is still relatively low compared to the cost of running a sports team. Like we were talking on this podcast, those $1 million CSGO salaries, and we're like, oh, that's insane. Oh, so much money for a CSGO player. I can't believe that. And then on the other hand, I'm like, or 42 million a year for an NBA, like, so the reality is also it's a very light portfolio bet for sports teams with a lot of potential upside. So I always feel sports teams get a little bit too much credit, unless it's something like the Dallas Cowboys guys, where we had the complexity folks on talking about that, where it clearly is a strategic lean in, and a long-term value play, and they're actually really aggressively going for the synergies between the facilities and the trainers and everything.
Can I present an alternative theory here on ESPN?
Yeah.
That's maybe I'm out to lunch here, but
you can if you make it rhyme. No,
if I make it rhyme, yes, I will make it rhyme, William. No, but there is an alternative potential theory here, which is COVID hits, right? ESPN has no sports to write about. So they don't sell ads because, right, no one's watching ESPN because no sports are running, right? So ESPN's business and revenue is not doing well over the last year or 8 months or 9 months or whatever, right? And they look at their P&L and they go, look, before the end of the year, we have to make some cuts, right? We had a tough year. And they're looking at all the places where they can cut, and they go, well, this esports thing's not making much money right now. Like, let's just cut this.
But Paul,
like, why is that not like that you guys made it seem like it was a very targeted like gutting of esports, and what I'm proposing is maybe more just like, well, we got to cut something.
That logic does not hold. And here's why: because for your scenario to be true, like if this were working. Interest in esports is at an all-time high right now. That doesn't mean esports companies are all doing an all-time high well, because there have been some real COVID effects on the industry, but in general, interested. So that would be like a business saying, uh-oh, our business didn't work so well this year. Here's our new highest performing segment, but it's new. Let's cut that. Like in that
you're assuming it's the highest performing segment. That
was my point too.
But in this scenario where the content is performing, right? And now it's just, you would expect it to be doing even better vis-a-vis traditional content. I find it difficult to believe that ESPN's cuts would first come from their outperforming sector.
No. Let's be ESPN executives for a second, right? Okay, not esports experts. Okay.
Hi, Jim at ESPN. Tell me.
Okay. So I'm looking at my portfolio of business, right? And I'm going, COVID has killed us on the sports side, but COVID's going to end at some point. So I can gut my NBA journalists who next year are going to make a fortune for me, or I can gut my esports guys who, maybe it's doing okay right now, but I'd rather keep my NBA guys. No?
Okay, well, I'll make my counterpoint. I'll be Mike at ESPN. I'm Mike. And what I would say is, let's look at relative performance. Esports is up 30% year on year. Sports on COVID. Sports is down 50% or whatever the metric is. This is your portfolio diversification. Are you really going to cut the one thing that performs well in this type of adverse climate? Like, this is the definition of diversified business. So lose an NBA journalist this year. You can hire him back next year or somebody else, right? But don't cut the one thing that's working and driving eyeballs in this situation, right?
But then that begs the question that it's driving eyeballs. Like, do we know it's driving eyeballs?
Well, that's the point I'm making. If it's driving eyeballs, then I get to make that argument.
Yeah.
If it's not, then I have no argument. I would say you're right. It's a risky venture. It's not working. Time to cut it loose. We got to button down the hatches.
Well, we're back to sort of your original scenario, guys, which said the ESPN's audience doesn't really care about esports. And I think if I'm to sort of add anything to that argument, it's that the fundamental problem is age. Right? You look at the average age for a traditional sports fan who would watch ESPN or read ESPN. Football, you're talking in the 50s. Basketball, you're talking late 40s. Right? Baseball, you're talking 50s. Like these are average traditional sports fan ages. Like most of that age group, let's call it late 40s to mid 50s, does not really care, I think, enough about esports to justify an entire division.
And that's the thing too, like, with the TV deals, Overwatch League's on ESPN too. It's like, so how many people watch that? 5? Like anybody who's into esports enough to be watching the Overwatch League finals are going to be watching it on Twitch. They're not going to be, they're not turning on ABC or
That's the mistake I feel ESPN really made here. Like the strategic mistake is they tried to be, their business strategy is hardcore coverage for the deep fan, right? Like that works for baseball, basketball, football. They tried to do that for esports. The problem is that doesn't get their audience. Like if the headline article is, like CS:GO pro roster signs, superstar play, right? Like, and I'm over here in NBA world and I'm like, what is CSGO? Like, who is this? I think the mistake they made and the opportunity they had that actually could have been a more synergistic business opportunity would have been to do more content that was entry level and do it more in partnership with the publishers. Because publishers know they rock getting 16-year-olds, 16 to 35 in. They nail that. Every publisher knows, like 45-year-olds, not such a hot demo. But if there's one group or one, like a fulcrum that might be able, or pivot point that might be able to get that demo in, it could be sports fans on ESPN, because at the end of the day, if you like watching NASCAR or Formula One, you probably will like watching esports, racing, like iRacing or something. So I think they missed that bridge opportunity. I think their strategic approach was incremental fan base. And what it should have been is incremental engagement. It shouldn't have been how do we get new people in the door here. It should have been how do we give another service vertical to the people who are already here. But hindsight's 2020, right?
Yeah, I think their content just wasn't that fun, to be honest. Like if you watch any of it, it was pretty dry, right? And they did some League of Legends stuff, but it lacked character. It lacked like if anything, like, and I'm not a big ESPN fan. It's not like I watch ESPN. Yeah, I don't watch that much traditional sports, but Sports Center has a certain, even for just reporting sports news, has a certain pizzazz, has a certain like entertainment factor. And I really felt like that was lacking on the esports side, almost like they obviously didn't fully understand the audience. I wonder what you guys think about had ESPN launched it under a separate brand, if that might have worked better.
You go, William.
Oh no, you go, JP. Come on.
I just think it's got to be organic. I think the people who watch esports and the people who are into this kind of thing are a younger demographic, and it needs to be, if I want to watch an esports content on TV or whatever, it needs to be somewhere I'm like, okay, I get it. You know what I mean? It's not. I think they're trying to apply the old model in all these different ways to this new phenomenon, and I think that's the mistake. Whether it's the structure of because I haven't watched a lot of the ESPN content, but I definitely read a bunch of the articles, and even the articles that I would read, it's just like, this is an old school style article, and then they've got the air quotes around the guy's gamer tag, and you're just like, there's a disconnect between what we're trying to do and what we're doing, and what we should be doing, and that's just how I frame everything. Like,
I mean, JP, let me put you on the spot. Yeah. If ESPN had done a show hosted by Doc talking about esports news, would you have watched that on ESPN?
I mean, that's the thing. Throw money at that. And I think I'm not the only person who's in that. But Doc is like, he's, in my opinion, going forward, like a media personality that drives engagement, has to have a little bit of controversy, a little bit of edge. And I think the old media TV guys, they're so polished, they're so refined. It's boring. I'm just like, I don't care. Like, if I want to read the news, in my opinion, I want to read the news, I'll open up a news article and read it. I don't want somebody droning off the news to me. So for any kind of like, I want interaction, and I want action and excitement and personality.
William, how good would an ESPN esports gossip show have been hosted by XQC?
You hit the nail on the head. That's what they should have done too.
Yeah.
Because I JP, you said it very well. There was a formality to their writing that just doesn't exist in the industry today. And I know where it's coming from. It's coming from editorial, old school, masthead. We're the authority. We bring professional journalism. And I'm not faulting the writers. I think the writers wrote good stuff. I think they were given a direction and a tone that was ESPN. And the reality is, like you said, like, I think why ESPN succeeds with sports fans is they actually, although they have that as sort of their top line structure, under the surface, they are very colloquial in how they approach, discuss, and engage with sports. And they never did that with esports, right? There was no, like, to your point, like, maybe they needed a real pro journalist to pair with the doc, but they needed somebody like the doc to give it the edge and, candidly too, I think part of it is just the age gap. Is I expect their tools and targeting is 45 plus, and the reality is the younger audience does. I mean, look, we're used to misspellings in Twitch chat being like a great read, right? So it struggled. It struggled a bit. It never. I don't want to say it felt like inauthentic content, because that's not right. It did feel authentic. It felt like content that wasn't friendly at the end of the day. And I think that was, again, and that's not the writers. I think that was a strategy that was imposed, but it's not where the audience is right now.
Okay, guys, here's the question, and I'm going to wrap up this topic on this, but I'm curious to hear both of your input on this. Fast forward 5 years, okay? Are we going to see ESPN back in esports?
Yeah, ESPN is going to have a Twitch channel, and they're going to be doing it. They're going to lick their wounds. In my opinion, they're going to lick their wounds and come back. I think so. It's not going to be another ESPN vertical on the ESPN website, or it shouldn't be.
Okay, so you think it'll just be some social activation maybe and the occasional live stream? William?
They have to. They just have to. That's the odd thing to me, is like this decision, I think, is driven on the belief that esports are a passive, like fundamentally, if you're a sports coverage network and you think esports have any stake in the future, you don't back down from this. I think this decision is based on a little bit of short-sightedness that, well, it's just a fad. It's just those gamers. It's not going to last. And the reality is, if you look at the growth metrics, it doesn't take that many more years for esports to just absolutely dominate. And already on a global basis, it dominates, most traditional sports. So yeah, they're going to have to come back. And I think when they do come back, unfortunately, it's not going to be as a category captain position. It's going to be exactly as JP said. It's going to be as a Me Too contributor. You're going to get a great channel on Twitch going with some funny guys and girls, and it will be one of the many good channels on Twitch you watch. But it is not going to be the destination for esports content like this initiative, had hopefully been the masthead or the flagship for.
I also think too that gets back to the everybody's so focused on an esports tournament where people are playing with two teams. It's like, I just want to, if you want to get content, like there's content out there that's not specific to a competitive thing where there's a prize and sponsors. There's this whole other world where it's like, it's like a, what's it called? A variety show. It's like a gaming variety. And where Olivia Munn, like Fuse TV,
Olivia
right?
Munn, yeah.
That kind of thing. I think that kind of thing, I don't know if that's on TV right now.
But could ESPN have done that?
Well, that's the thing. I think that's when you get into the question of like that you start going back to how do you define esports? And I think people aren't from the industry, didn't grow up playing Nintendo, don't understand how much fun it is to play a game with somebody where you're not playing for $5, you're just playing and hanging out and shooting the shit.
The other thing I'll point out here, because this is actually a funny moment in time, I remember, when some of these websites like TO and Dexerto and things were building traction. And, I was in, some investment meetings. People are like, oh, we're never going to invest in those guys because they get killed the instant ESPN comes into the space. And somebody said, this is the equivalent of, if you're doing any company and people say, well, what if Google does it too? Like, what if ESPN does it too is the equivalent of that question for the sports world. And I just think it's really interesting that, like, that's how important authenticity and endemicness is to the space today. That, like, this was Google coming in. This should have worked. Like, if I had been a betting person, I would have bet on ESPN when they launched this. The fact that it didn't speaks volumes about the knowledge gap, the preparedness gap, and I think in general, I hate to say it because it sounds like the age gap that's affecting the industry right now, and really preventing many brands and companies from crossing over as effectively as they should, right?
Guys, I just want to wrap this up by saying that it's, I think the message here is it's unfortunate though that these people did lose their jobs, and we feel for them.
Really sad. And they were good journalists. Like, some of these guys and girls were really good journalists.
But let's move on. And actually, quickly, I just want to say before we move on to our last topic, just a quick word from our sponsor, guys. The single fastest growing area of esports is gambling. It's booming right now. A lot of you have listened to me talk about how I think that area is risky, though, as an investment. It's kind of shady, a lot of shady companies. There's one exception. It's a company I'm a big fan of, Esports Entertainment Group. They're NASDAQ listed, fully regulated, ticker GMBL. We've had the CEO on the podcast a few times now. And if you're a family office, institutional investor of any kind, I highly recommend taking a look at esportsentertainmentgroup.com. If you're looking to bet on esports and the esports gambling space. Having said that, it's just my opinion. I'm not an investment advisor, not selling stock in the company. Do your own research and get advice from a licensed professional. Last topic, guys. Let's move on to something that didn't surprise me at all. Sometimes these topics surprise me. This one was zero surprise, but I think it is interesting, and it's a big public company. Take-Two submits proposal to acquire Codemasters. This is from the Gaming Economy, and they talk about how Take-Two has submitted a non-binding proposal to acquire racing title developer publisher Codemasters for almost 740 million pounds, approximately 3/4 of which would be paid in Take-Two share capital and the remainder in cash. Basically, all of this will be done, essentially, assuming everything goes through, by Friday, December 4th. So, huge acquisition, right? We're talking about very, very big dollars here, and most of it in Take-Two shares. The reason I said it didn't surprise me is because I felt like the run most of these public game publishers have been on, from a stock price standpoint, they're all sitting on like super valuable currency, and these kinds of acquisitions seemed inevitable to me. I don't know if you guys see it any other way. I mean, JP, you're looking at public markets all the time. A, does this surprise you? B, do you think it's,
Go ahead. What's the
Go
B?
ahead.
What's the B? What's the B?
No, I'm curious because Take-Two is a company that I think, for the most part, is known for story-driven games. I think that's fair, other than NBA 2K, right? Is this a further expansion into sports games, right? Like, is this strategic really for Take-Two? Is that what they're thinking here? Or is it just like, let's go buy another big publisher because we have really valuable stock?
I think a little bit of both, maybe. I'm sure you guys, I didn't watch your ZeniMax or Zenisoft podcast. I'm sure you guys talked about the Microsoft thing. I expect the big boys to be eating up the medium and the small guys like crazy over the next 5 years, because every piece of IP that they own is just money in their pocket, and I'm not going to speak to the financial deals of whether they overpaid or underpaid or what's the effect of it, but the simple fact that this is a popular, that this company has popular games that people play. And when you have that ongoing interactive engagement where fans are excited, there's a community, there's a league, there's this or that, when there's activity, that is what's valuable, in my opinion. That is where people are hyped, and there's an active subreddit and there's an active Twitter, and that is the value to me, because those people, you can count on them for years. You know what I mean? That's my initial take on that.
I mean, William, we had Strauss on the podcast.
Yep.
Right.
Yeah.
I didn't, maybe I didn't read it right, but I got the impression that he's more of an organic growth kind of guy, believes very firmly in kind of the games they're making. This is obviously not in line with that. Maybe I misread, right? But or it's either that in my mind, or this is NBA 2K. They want to take their experience there and apply it to F1. Like, is that fundamentally the reasoning you think?
Definitely a bit of that, right? Sports league to sports league, there's synergy. But I actually think it's very in line with what Strauss described, because if you think of Codemasters and the reputation, like how they've carved out the space they have is they are a little bit of an auteur developer, right? Like, they really do super serve this hardcore racing fan base. And, my understanding is, like, the people who work there are, and this is the manager, it's like extremely driven to fidelity and accuracy, and, in a way that, like, just let's be honest, it's not grid racing, or Mario Kart, right? So I think it definitely fits with his thesis of people who are just absolutely committed to making a certain type of game extraordinarily well, right? Because I'm not a racing guy, but I have a very high opinion of Codemasters, and I think people in the industry do too. So that's the first piece. Then the second piece of it is, look, the reality is, if you are pursuing this auteur-driven approach to game dev, how do you grow? because you can't exactly go to Rockstar and be like, hey, we need that Red Dead Redemption 3 like next year, you know? Like, if you're not going to go on an EA annual franchise path, right? And that clearly is what Strauss does not want to do, based on the conversation we had. You sort of like, there's only so much juice you can get out of those lemons. So what you have to do is grow by acquisition, and you look for studios that fit with your, you know, approach to premium care driven development, and Codemasters fits into that. So I suspect this is how this type of business managed this way in gaming needs to expand. And if that's true, and, you know, to JP's point, I would expect many more acquisitions to follow, partly in everyone in the industry because their stock prices are crazy high, but particularly for these more quality-driven developers because it's the only way to scale revenues effectively.
But couldn't you construe this as bad news then? In the sense that, like, look, and we tried getting Strauss Zelnick to admit, or at least to confirm when GTA 6 was coming out, to no avail. You know, he would not...
I didn't see this guy on you guys. I got it. Which podcast was? I got to.
It was probably about a year ago now, and we could not get him to reveal the date. He thought maybe he would like a bigger stage to reveal the date, and I don't blame him. But look, what's weird to me is if they had like their unique IP that was going to, if GTA 6 was coming out in February, right? I don't know if they'd be buying. They're buying Codemasters. They bought Playdots, and in August they bought Dundee-based Crackdown 2 developer Ruffian. Right. So they bought Playdots, Ruffian, now Codemasters. Right. We're talking about 3 relatively large acquisitions. Like, if you had a new GTA game in the works or some new IP in the works, and you knew it was coming out, right? You probably wouldn't go on this buying spree. You'd be confident in the sort of the shelf of IP that you have coming out, right? Like, so am I wrong to say that maybe this is bad news? They're like, well, maybe GTA 6 doesn't come out till 2022, so we got to do something now.
I mean, the counter argument, look, yes, partly, and sort of you're arguing pipeline problem. That's sort of what I was saying, pipeline problem, right? Like, the developers get the games done when they're ready. You can't make them go faster. That breaks your strategy. So, but partly, you know, I could make the opposite point, which is, to some extent, the Grand Theft Auto franchise has succeeded so well, so phenomenally, it can't sequel. This is the World of Warcraft problem, right? Like, they are making so much money off Grand Theft Auto Online. Like, honestly, I don't think anyone's in a rush to launch Grand Theft Auto 6 because they don't need to. If anything, they're just going to, you know, cannibalize their own pie. This is why World of Warcraft 2 has never come out. Blizzard's never launched World of StarCraft, right? Because when you have, in these service-based games, when you have a true meteoric success, it is far more cost-effective and efficient to continue to monetize the existing user base than to try to execute title migration. And so I find it hard to say anything about, the only time I'll ever grant you it's bad news for Grand Theft Auto as a franchise and the pipeline problem is when the GTA 5 revenues really start to decline. But right now, the problem they have is, oh no, another year of record-breaking GTA 5 online revenues for a 10-year-old game or whatever. I mean, it's insanely old now. Whatever will we do, you know?
Well, I mean, you have to think they're prepping it so that when they see that coming down, then they'll start the marketing ramp up for the next one, right? Like, that thing's got to be like built. Not that I know anything about it,
or in the works in some way, right? Like
because you know, I follow them very closely, and it's like they're still, it's just all GTA. That game came out in 2013. I mean, that's crazy.
Yeah,
and that's the thing I think that points to this. It's like, one of the things we always say, because we rah the industry, and we're like, this is, you know, blah, blah. And then we say, well, there are risks, right? So the risk is always single game risk, right? Like, you think this game's going to be huge, it comes out, it's a flop, and then you're screwed because you don't have anything else, right? So they're kind of dependent on GT. I mean, is Red Dead Online driving? You know what I mean? Like, it's not really from
not GTA revenue.
And like, what about, like, you know, I know they bought the mobile company a couple of years ago, but like Social Dynamics, I think that's what it's called. But it's like, I don't see those games, you know, because I'm in the mix, you know what I mean? So I kind of judge stuff anecdotally too. It's like GTA is still here, Red Dead's not here. So what else do they have? You know, so this to me is just like, we need something else. That's what it is for me.
Yeah, and it's interesting, right? Like, because you also don't want to be buying out of desperation. I'm not saying it's definitely not desperation, right? The company has been doing extremely well, but William, I want to wrap up on saying World of StarCraft. Where did you pull that from? I feel like that's the greatest idea ever.
Wait, that's like commonly talked about as like I've been saying World of StarCraft.
I would play
like,
that in a second. Why have they not done this?
That's the common criticism. This is way back when I wrote the Harvard Business School case on World of Warcraft, right? Like the obvious question you would have is, because if you look at what they did with their core franchise, Warcraft, StarCraft, right? The obvious thing to do with World of Warcraft was World of StarCraft, right? That was like the obvious evolution. But, that's the fancy proxy term for the sequel large scale MMO, right?
But I don't think it would cannibalize. Anyways, I think it's a genius idea. I think they should be doing it.
You think World of StarCraft is so clever? That's not me, buddy. But I will say, I will say, but I will say it kind of is one of the things that kills me a little about our transition to a live service industry, is it really does hamper, some of this innovation that would make sense in a vacuum. And it really does make me think that there might need to be in the next 5 to 10 years a rethinking of the portfolio strategies of these companies oriented specifically around brand management, right? Like I think today, and this is actually a good point, so I'll end on that because this is like a big thinking thing I've been thinking about. If you think of how game developers or publishers manage it's studio managed, right? So like, what is Rockstar working on? And that's how we think about it. Oh, Rockstar's working on Red Dead, then they'll go back to Grand Theft Auto. If you think of most mature companies, they are brand managed, right? Like you're in charge of the Grand Theft Auto brand. And yes, they have brand managers and things there. I'm overstating the case, but the reality is why you don't get World of StarCraft is because it's still studio led and not brand led. And I think over time, one of the shifts we're going to see in our industry is more sophisticated publishers moving to brand-driven studios. And I do think that's actually going to help to return some of the innovation to our space. But that's my 2 cents, roll the dice when you're ready.
Would you say that EA is doing a decent job with that? With the Star Wars Rogue Squadron came out, and I mean that's what that's what you're talking about.
The reason why they're forced to do it that way, and yes, I think they are, is because they're dealing with a company that's specialized in brand management. It's Disney, right? And they're being forced to treat Star Wars as a unique vertical because that's the licensor relationship is pushing them. It like makes them treat it that way, right? Yeah. And the reality is, I think you can knock Star Wars, in the EA Star Wars games all you want. They've done a very good job of shepherding that product, those game lines into many different types of gameplay, right? Many different innovations. I would argue that Squadron was a huge step forward. I actually just started to play it now in VR. As well as this year, we also had the Jedi game that was phenomenal, the Metroidvania for Star Wars. Like they're doing, and again, that's the sort of thing you get when you're thinking brand, where does Star Wars go? And not the sort of thinking you get studio, what game do I want to make next, right?
Yeah. But other than like Disney's sort of weight that they can throw around, there's not a lot of impetus to move to that new model internally, right? Like at the game publishers, why would they move from studio-led to brand-led unless you have a brand pushing you?
But they sort of are being forced to over time, because if you think of like Call of Duty, right? Which, say what you want about the esports side, it's an unmitigated success year on year as like the marquee military shooter. Multiple studios develop that game now, right? Like they're being forced to make the transition to a branded property play, whether they realize it or not, the developer, precisely because the demands of the brand outstrip the capabilities of a single studio. And this is why you end up with a company like Disney, which is maybe the greatest branded company that basically doesn't make anything, right? Because at a certain point, the brand is so big, all you need to do is the brand. And I think that speaks to the power of video games, that we're getting to that level, right? Like, I cannot believe we're in a world where these games that I grew up playing, like are powerful enough that they deserve to live independent of any gameplay iteration, whatever. Like, that blows me away. But at the same time, it is the trend in the industry. And I think the publishers that wake up to it earlier will do the best, and it will help address things like the content fatigue that I said, like we touched on, right? Like the pipeline challenges. So TBD. But
that's a great wrap, guys, to the podcast. JP, before we sign off here, I always love when our guest sort of leaves a message with our audience, maybe ways they can reach you if you want to be reached, anything you want to plug on your end, what games you're playing these days, like anything you want, really. It's your time to close out the podcast.
Well, it's been my first podcast I've ever recorded, and I really appreciate your guys' time. Had a great time. Games I'm playing, I just pre-ordered what's it called, Cold War. It's coming out tomorrow, so I'm stoked about that. I just been playing Warzone exclusively. And then besides that, from an investment perspective, I really believe in the ETF that we've got, VanEck Vectors Video Gaming Esports ETF, ticker ESPO. Again, do your homework. If you have any questions about the fund or the ETF, just go to www.vaneck.com and you can just call us, and we'll have somebody talk to you. And we're always available. I'm on Twitter, JP Lee VE. So it's been a great time, and I really appreciate both you guys.
And if you want to find JP on LinkedIn, just search Easy Livin in the search bar.
That's right. Yeah.
And I'm sure you will eventually get there.
When you're getting spawn camped in Warzone, even though I know you can't spawn camp in Warzone, you can look up and see the EZL tag. And
guys, thank you so much. William, thank you. JP, thank you so much for being on the podcast. As always, to our listeners, thank you guys for tuning in every week. Don't forget, every Wednesday evening, 8:30 p.m. Eastern time, we do a live stream. We do an after show live stream. It's a lot of fun. It's interactive. It's all the topics and news that didn't make it into the podcast, usually some that are just as important, but often some that are a little bit more fun. Also, podcast drops every Thursday. As you guys know, stay tuned for that. And every Monday, you get a 1-minute video from me summarizing all the news from the week and my take on those big stories. Thank you guys again. If you haven't yet bought William's book, The Book of Esports, on Amazon, and make sure you leave that 5-star rating and review on the podcast. It helps other people to find it. Thank you guys again, and we will see you next week.